I know you did the gold outlook 2022. I know last time in January, I don't think we expected to hit an all-time high in March, a couple months later. So I was going to see if you want to just comment on the outlook on 2022 or just how gold's trading right now. Just if you had any comments of what you think right now, what's going on.
Yeah, so we put out the gold outlook report. Yeah, end of January, I think it was January 31 that it hit.
Yep.
And so first of all, we gave ourselves a scorecard. We've been doing this for 10 years. And so a lot of years we did pretty good overall. I think we did good. 2021, we did not do good. We said price is going to likely go up, and that's not what happened. But and I think all the drivers are still there. But this year I said, I think this is the hardest time ever to try to make a call, because we're at this huge fork in the road. So the Fed is sitting here saying, we promise or we threaten, depending on take your pick, to hike rates a lot. And so if they go down that path, we have one set of economic outcomes. And on the other hand, I don't think the Fed, if they hike rates, I don't think they can hike them very far, and I don't think they'd be able to hold them very long, which is exactly what I said the last time we got to this juncture, which is 2015. Yellen was taking over, and she said, we're going to hike rates. And even Bernanke in his last days was saying, time to hike rates. I said, there's no way.
Yep.
You won't be able to do it very far, and you won't be able to do it very long. Everyone said inflation. Said ain't going to happen. Anyways, they were forced to, turn right back around. And now I think the situation is more dire than it was in 2015. So I think there are even more downward pressure on rates, not upward. So, but if the Fed persists, they can cause a lot of damage. I shouldn't say cause a lot of damage. They can precipitate the realization of the damage that has been done. It's really important to emphasize the damage is done during the boom.
Yep.
The bust is when the accounting catches up to the reality of what happened. But nobody wants to take their medicines. There'll be a lot of bankruptcies, a lot of ruin if the Fed really hikes rates, and skyrocketing consumer prices, because they will destroy the marginal producer in every market. So if they persist in that path, that's not necessarily a bullish scenario for gold, definitely not bullish for silver.
Mm-hmm.
And the difference between the two is gold is a capital asset for the capital asset owning class generally. So as long as there's a bid for other capital assets, even if the other assets are falling, gold may be reasonably well bid. So if we have another 2008, I would expect this time around that the price of gold would drop less than it did in 2008, which is about 30%.
Yep.
I would expect a smaller drop this time, and maybe not necessarily much of a drop at all. And then gold was certainly the first to recover and made new all-time highs in January of 2009. Nothing else was making new all-time highs for years, but gold was. Silver is a bit different. And silver is the preferred go-to vehicle for the wage earner. Somebody who's, let's say, setting aside 10% of their wages. So depending how much money you make, 10% of your wages every week might be, let's say, $50. What does $50 worth of gold look like? Well, it's less than a gram, right? I mean, so, back to Malaysia, how do they sell 1 gram bars? It's in a Percement Certi card. I don't know if you guys deal in those. Little size of a credit card, there's a little plastic window, and inside that plastic window, in this credit card, this little chip of gold is floating. You can, sort of shake it and hear it, and you can almost see it, and it's not very exciting. What's $50 worth of silver? Almost 2 ounces. I mean, not including premium. And an ounce of silver is a big chunk. I mean, you got some chunks of metal in your hand. And for that size, you're paying less in premium for the silver than for the gold. It's a more efficient way to buy metal, especially if you're not buying silver eagles, but let's say you're buying, rough cast, little bars. So for the wage earner, silver, especially globally, silver makes more sense. That's what they turn to. So as the economy comes under stress, the wage earner is under stress, and if the wages are depressed or a person loses their job, they're not buying silver. The capital owning class, even if things are under pressure, they're always trying to reallocate their capital. So you could have a scenario where the gold price is going up even when other things are going down. Why? Because gold is the thing you own when you don't trust the banking system. Why would anybody not be trusting the banking system in an era where the Fed seems hell-bent on deliberately causing insolvencies and bankruptcies, which begin to cascade like dominoes? Well, maybe people wouldn't want to necessarily trust that. So you could have a scenario of, the gold price maybe rising or maybe kind of holding its own and the silver price plummeting. And that's a scenario for another gold-silver ratio, over 100 or 120 again, which is what we had obviously before the crisis. So on the other hand, if the Fed were to back away and, come back with their tail between their legs and say, we can't really do sorry. Then, and we're going to not raise rates. In fact, we're going to lower rates, and we're going to do this, and we're going to do that, be more stimulative. Well, then, obviously, you're not going to have bankruptcies immediately, and markets will rally very hard. Mm-hmm. And then the inflation trade will be back on. And then, in the Outlook report, we said that you could see $400 silver and $2,100 to $2,200 gold in that scenario. But that would be, it's very good for the silver price. And we're at that fork right now. Now, at the time we wrote that, we did not anticipate Ukraine.
No doubt.
So what's going on right now? I'm not sure I know better than anybody else, but commodity markets have been absolutely roiled and disturbed by Ukraine. So Ukraine, I think, produces 10 or 15% of the world's wheat. Something like that. Now the world has to assume there will be no wheat export this year. So not only is the wheat price shot up, but the wheat market has gone into backwardation. Mm-hmm. So backwardation is when the near contract or spot contract is more expensive than the farther out, the more distant contract, which is something I've read a lot about. Could happen in gold. Did happen intermittently in gold for years after the 2008 crisis. Gold and silver quiescent at the moment, showing backwardation, but happened in wheat. So this is a very perverse thing that is now absolutely killing the farmers. So if you have a farm, you don't want to just take a bet on the price. You want to hedge, and in fact, to get the money you need to plant and everything else, you have to hedge. So what's happened in the wheat market with this backwardation? They're getting killed on their hedges two different ways. One, the price of wheat is going up, and so their broker is calling them up saying margin call. And it's not like they can just sell the wheat. I mean, they have to grow it first. So there's nothing to sell at the moment. So they have to go to their bank and beg for more money, and that money is going to come with strings attached. The bank's going to get their pound of flesh. The second problem is that the backwardation is so severe that on Monday, if let's say you were short the May contract and you wanted to roll to December, you wouldn't have to roll yet. You still have a little more time, but somewhere in April you're going to roll that contract. So if this condition persists, these guys are in a lot of trouble. The May contract was trading at $13 a bushel. The December contract is trading at $10. If you're short May, the way you roll it is you buy May and sell December. Buy for 13, sell for 10, and lock in a $3 loss. Well, I don't know how much money they make on a bushel of wheat, but I have a funny feeling it's not $3.
Yeah.
So they're getting killed, and I don't know if farmers are going to go bankrupt as a result of this. If there'll be more consolidation, Archer Daniels Midland will have more opportunity to buy more small guys out because the small guys just can't survive any longer. They just can't hold out anymore. I don't know. So it's a funny environment. Consumers see quote unquote inflation, but the producers are not necessarily making more money, and maybe there's a middleman who's seeing as the spreads get wider, the guy in the middle is making more. So he has his day in the sun, but as this thing rotates, that guy's going to get crushed next. And so this thing is going around with a wrecking ball, smashing that building, smashing this building, smashing this one. And if your building isn't being smashed at the moment, I guess things are good. But that wrecking ball has a tendency to move around, and that's where it is right now as of second week of March 2022.